Welcome to this edition of Stock Market Pulse. My name is Eric. Today is Monday, March 14th, 2016. We are a few minutes before the close, but I wanted to look at a little bit of a bigger chart on the IBB ETF. And I want to talk a little bit about what I'm seeing and what I'm looking to do possibly this week, but I'm trying to give you guys some of this stuff ahead of time so you can look check it out. So first of all, you can see the high of the IBB. This is the Biotechnology Index Fund ETF. And you can see that, the high was put in last summer. We've really just been in a pretty decent downtrend ever since. And I think a lot of this is on the back of, most of the presidential candidates are sort of against the price hiking that's been sort of seen. There was a big thing about Martin Shkreli. I forget if that's his name or not. But there's just a lot of stuff in the news about these drug companies raising prices, and then will the new president bring in regulation and all this other stuff. So I think IBB's been under pressure really ever since that came out several months ago. So but technically, what I'm looking at is this rally we've seen. Now, as of today, the market has been up 4 weeks in a row. This would be week 5 if we can pull out a win this week. It's a little bit sketchy. It's only Monday, so we'll see. But I want to really look at the underperformance of the IBB as of today. And if we take if you use this purple line here, this is a 13 EMA. So I'm looking at the weekly chart, and you can see it's we're kind of well below that. And the last time the IBB was able to get back up there, traded sideways and fell. But if we take a look at like the SPY, we'll get a couple ETFs here. These are definitely trading back above their 13 EMA. It's actually started to curl back up on the spiders. We look at QQQ, very similar, not as strong, but still back above the 13 EMA. It looks like it could kind of head for that top of that upper band. And the last one, we'll look at the IWM, and IWM is actually above that too. So I know the Russell typically has been underperforming. It's been outperforming as of recently, but the IBB is just kind of stuck in the mud here. So a lot of technical guys are going to say, hey, this is a giant bear flag. I kind of agree with that, but I want to point out to the last time we started to have a recovery. So when I look at the DMI Oscillator, and we hit this sort of peak low, this was in October, where we got down to this negative 32 level, and that really kind of marked the bottom here. Didn't quite get here on this massive sell-off, but basically over the next several weeks, the IBB kind of slowly grinded higher, and really you couldn't really do much with that because it was such a slow grind higher. But once the DMI oscillator turned back down, and typically that happens is when you get a weekly a candle with lows that exceed the previous week, you're going to start to get a stalling or a turn down of the oscillator here. So this was the time, and let me put a little arrow here. Oh. This bar is the bar that could tell you, okay, let me see if I can make some bearish plays here. Now, obviously, buying puts would have hurt for several weeks. So what I'm looking at doing is, had you sold puts at the end of had you sold call spreads at the end of the week, out of the money call spreads, you could have had a pretty decent trade set up with the idea that this would have traded sideways for several weeks. Ultimately, you get another flush down, and I think we're setting up for a similar chart as well. So right now, the weekly DMI oscillator is still ever so slightly up. Now it's only Monday, so we don't know. But the last time the IBB before it turned over had 1, 2, 3, 4, 5, and then the 6 bars when it turned down. So right now we're on 1, 2, 3, 4, 5. So we'll see if we go another week before it turns back down to make some plays, or it could happen this week. This is triple witching week where there's options, futures, all that stuff. And then you also have the Fed coming out on Wednesday, and that could very well sway the market as well. Now, the week after quadruple witching, now they call it, actually has a bearish bias. So there's a lot of expiration type stuff happening this week. So I don't want to make a commitment to this trade yet, but I want to see where we play out over the next week or so. Basically, what I'm looking at now is if the market closes near the high of the week, I'm going to wait till next week and probably start selling call spreads into next week. April call spread, something like the 285s or 290 with a 5 strike $5 strike spreads. If we start to sell off this week, let's say the Fed gets super hawkish on Wednesday, then I'll sell something closer like a 280, maybe 275 bear call spreads for April as well. So that's what I'm looking at for a bearish trade in IBB, really more of a sideways trade. With the idea that this sector continues to underperform, and the closer we get to presidential, elections, I think this will, until there's some more certainty, I think the IBB is going to be under pressure. Hit me up on Twitter if you want to talk more about this, and we'll see you at the next update.